Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, would you like to retire sooner? Or those that are retired, would you like to retire with more income? Well, I want to teach you the top 3 tax mistakes, hence tax mistakes retirees make costing them thousands. I talk about that on Taxes Save Radio this weekend. And I want to give you a couple key insights from this. Number 1 is not taking advantage of tax loss harvesting. Now, listen, it's now found, unfortunately, by the Tax Foundation that about 2/3 of Americans find the tax code overly complicated. And if that wasn't enough complication, right, of confusion, then One Big Beautiful Bill Act that Trump just passed on our country's birthday, right, July the 4th, is making Roth conversions that much more confusing. And Roth conversions, inefficient Roth conversions, is one of the top 3. So first is not harvesting gains, because married filing jointly couples out there, you can take out just shy of $97,000 from qualified dividends and long-term capital gains from your portfolio, totally tax-free. In fact, I talked about that this last week. The second thing is what we call the Social Security torpedo. See, for people that don't know which account, which amount to pull from, 2 things happen. Number 1, they subject to having up to 85% of their Social Security tax, which for many of you listening is going to be a loss of about 10 to 12 grand a year, which is hard to believe just in Social Security taxes, especially for all the years we spent paying into the Social Security tax. And then thirdly, right, or second to that second point is if you don't plan your Social Security properly, right, and you don't plan the withdrawal from your brokerage accounts efficiently, and most, if not all, your money is in these traditional accounts, and you then get into what's called required minimum distributions. This is where we find a lot of you having subjected or on the path to subject 85% of your Social Security being taxed for life, costing hundreds of thousands of dollars of unnecessary Social Security tax, but also not knowing which accounts, which amounts to take from to avoid taxes out of brokerage accounts, so you also don't have phantom income where, depending on the assets you hold, can throw off capital gains that have to be counted that you didn't realize were hitting your tax liability. But the big one is inefficient Roth conversions. So let me leave you with this. About 80 to 80, the experts are finding now, and I just spent some time with one of those experts this past week, about 80 to 85% of people, it's now determined, won't or do not benefit from Roth conversion. Why? Because of timing and technique. They're not going about it the efficient way, meaning you don't pay the tax out of your accounts, right? You definitely don't want to pay the money. Rarely would it ever benefit somebody to pull money from their IRA to cover the tax to convert their other IRA money to Roth IRA. That's what we call lost opportunity cost, or creating a tax to offset a tax. But there's also strategy, and I'll teach you at taxessave.com. That's taxessave.com, of a couple we helped Roth convert $1 million and not recognize any added income by using deductions that offset the conversion tax. And this was the efficient way to do that. Why? Because now their income is being derived in a fashion that doesn't subject them to federal or state income taxes, doesn't trigger up to 85% of their Social Security being taxed, doesn't create a tax on their Medicare premiums, Part B and D, and doesn't leave a huge tax liability or any tax liability onto their children. And I'll leave you with this question. If you knew today that you were going to be exposed to paying 2 to 4 times more in taxes than the balance that you saved, when would you want to know? And for those that don't need all of the income from what you've worked hard and saved hard in, wouldn't you want to know that you could leave easily $1 million to 2 or 3 or multiple millions of tax liability to your adult kids, and it could be prevented? Folks, you've worked hard for your money. Taxessave.com, taxessave.com. Watch the on-demand educational short webinar. Scroll down to the bottom of the page and request a saving tax optimization plan and learn the tax risk road you're traveling so that you can learn where the reroutes are. I think of a client I'll leave you with this past week. We're saving him a large 7 figures of unnecessary taxes. But it's not just saving he taxes, it's saving their son and their daughter taxes, but it's moving up their retirement. So if you're somebody older and maybe you're already retired and you're saying, my kids need to hear this. Folks, it's called the Great Wealth Transfer. And if you're somebody younger and you're saying, and we just had a couple people call in just this past week saying, hey, you know what, my father, I can tell, like, there's some tax exposure here, and he's really kind of getting to the point to where he wants me to oversee this, and he doesn't want to leave a big tax burden, and we don't want a big tax burden. So it's kind of this cross-generational planning so that you're not unnecessarily leaving a tax, but you're also preventing a lot of unnecessary tax so that your kids don't have to go through the same process. And I say kids being adult children, and no differently than your parents don't have to inaccurately, position what they want to leave to you that ends up being a big tax burden, folks. Taxessaved.com, taxessaved.com.